Hello and welcome to Property Box Weekly News. I'm Simon Evison. Now, there's been a lot of focus recently on investment in the northern cities, and the previous Prime Minister's Northern Powerhouse scheme is still a focus for the government. The scheme, initiated by David Cameron and George Osborne, aimed to unite the northern cities as a single economic entity and effectively share the wealth of the UK economy more evenly and away from the traditional southeast. It involves devolving new powers from Whitehall, improving transport links and creating new regional mayors to act as figureheads for their regions. The main aim was to sell the idea to foreign investors, and the Chinese were the early backers. And further backing by central government has encouraged growth in the region. Building the Northern Powerhouse is a long-term government priority and central to our plans to rebalance the economy, said Andrew Percy, who replaced James Wharton as Northern Powerhouse Minister in Theresa May's reshuffle. Indeed, the Prime Minister herself, in a Yorkshire Post article, promised to help the great cities and towns of the north pool their strengths and take on the world. This is a clear indication then that despite the vote to leave the EU and a prolonged and uncertain future, the government remains resolute in its ambition to advertise to the world that the UK is open for business and is actively attracting foreign investors, especially in the property arena. Looking closely, Manchester, one of the strongest UK housing markets outside of London, offers the highest rental yields in the UK at up to 6.8%. Employment in the city is forecast to increase by a further 4.3% over the next 5 years, which will continue to fuel the lively residential market, where demand from the 2.5 million strong population already significantly outweighs supply. Average private rents in Liverpool, the second largest regional economy in the north, are up by 11% in 2015 and are expected to increase by a further 22% before 2020. What's more, Barclays has now been named as Northern Powerhouse partner and will work to support businesses across the area. And Andrew Percy is now urging all companies across the Northern Powerhouse to consider what they can do to promote the north of England as a place where businesses can thrive and grow. In contrast, and contrary to this initiative, the government taxation changes and further tax changes continue to deter new and existing buy-to-let landlords. Susan Emmett of Savills warned of the consequences of taxation changes in the buy-to-let market, saying that the government should be careful of what they wish for. She commented, "Fewer buy-to-lets means more competition for rental properties, resulting in rising rents, making it yet harder for potential first-time buyers to save for a deposit." She went on to say that there has definitely been a slowdown in inquiries from investor buyers, but that some of these may now be looking in areas of lower cost housing. However, she warned this goes against what the government wants, as landlords will be competing more strongly with first-time buyers in these areas. To add to taxation woes, buy-to-let landlords face the risk of double taxation if they choose to put their property investments into a limited company to avoid paying higher rates of income tax. Nick Cartwright, a tax partner at Smith & Williamson, warned that there is a chance that buy-to-let landlords could be hit with a potential double layer of tax on part or all of their rental income, as they may be taxed both in the company and on the extraction of their money. He said, "Incorporation is good if you want to build money within the company, but not if you want to live off the income as it is earned." The issue appears to be that the landlord could be taxed on taking money out of the company, and where taken as a salary could also be liable for national insurance contributions, which could be payable both by the employer company and the director employee. So, be sure then that you get good advice from your tax advisor before investing as a company. That said, it's widely considered that property remains the safest investment strategy. And finally, Legacy Education Alliance recently celebrated their annual charity awards dinner in aid of the Make-A-Wish Foundation at the Savoy in London. TV's Mark Durden-Smith hosted the event, and Boney M, featuring original lead singer Liz Mitchell, were the headline entertainment. On the night, they raised over £50,000, and further pledges from participants of the LEA Three Peaks Challenge, launched on the night, will push that easily toward £100,000. So let's take a look at some of the highlights. This is the second Legacy Awards and the umpteenth dinner in aid of Make-A-Wish. Why is it important we keep supporting Make-A-Wish?
I don't know. I think it's such an important charity for us. What we do, we make dreams come true for people. You know, grant their own wishes. This is a fairly innocent charity that we've chosen that does fantastic things for unfortunate children. So, you know, we love it. We've been involved for 10 years now, and every year it just gets bigger and better.
Last year we were so proud of the award we had for the T60 coaching program. It just inspired us, really. It just reassured us that we were really adding value. We had lots and lots of congratulations, and it made us raise our game, to be honest with you.
Brilliant. Well, can I just say, well done.
Thank you.
Well, it certainly was a fun-packed evening, and keep an eye out for our special extended highlights programme coming soon. That's all from me this week. Thanks for tuning in. We'll see you next time. Goodbye. Is a long-term government priority and central priority. Is a long-term government priority and priority. Long-term government priority. Done it again!